Welcome back. Hope you're having a good morning. Well, in a few hours from now, we'll be hearing in from the RBI governor. But for the time being, let's get to some fundamental analysis. Well, we have Siddhartha Khemka, Head Retail Research at Motilal Oswal, who joins us on the show. Hi, Sid. Morning, and thanks a lot for joining in. What's your approach to Bajaj Finance? It used to be a bit of a darling in the past. It made big money for shareholders. Now they are talking about listing their housing subsidiaries separately. Any view, any kind of valuations that you've come up with? How do you play this theme?
Yeah, good morning, Nigel. Glad to be on the show. So if you look at Bajaj Finance, I think the last quarter was a kind of miss in terms of expectations. On its own, the numbers have been strong. PAT grew 21%. But what is happening is that the outlook for the core business has not been that strong. And we have seen a consolidation in the stock price. Valuation has kind of come down because of that. The Bajaj Housing Finance on its own also has been a consistent growing company. What we have seen is a very strong AUM of almost 915 billion rupees. AUM grew 32%. The company is seeing this as a to be on a standalone and could grow and focus on its own ROEs and ROAs. So that is a good positive development that this housing finance business, which is on the borrowing side also and on the lending side, is doing business on its own. Bajaj Finance does originate a lot of housing loans and gets paid commission. So already the business is at arm's length. So I think this delisting, demerger and listing of housing finance is only a positive. It will unlock value for a small business within the overall consumer business that Bajaj Finance does. Apart from that, recently they have been successful in getting the RBI's approval to restart the e-lending, which was stopped in November. So that is another positive. Not many have been able to recoup the restrictions that RBI has done in such a short span of time. So again, a very strong action from the management and able to remove that. So again, in the near term, I think these are some of the positives that should drive the stock price. So we have a target price of 7,800. But on the longest term, we believe that the stock could remain sideways given the high valuation that it trades at and the growth which is now kind of consolidating around the 20-25% growth. For that, the valuations of about 4 times on FY26 book value seems reasonable. So we don't see a big upside. But yes, in the near term, momentum could continue.
Okay, that's the take on Bajaj Finance. Siddhartha, hi, good to have you with us this morning. So, IT stocks saw a lot of interesting buying yesterday. In the last 1 hour, there's a lot of IT buying, right? This morning, we have some news on Wipro. They've signed a large deal, multi-year deal as well. What is your take on IT at this point in time? Where do you put Wipro in the scheme of things? And I mean, if you're looking to buy a stock, any names from the IT space?
Yeah, morning. I think what is happening is in the last couple of days, we are seeing the defensive space getting a lot of interest from the market. A lot of funds are shifting from, or we are seeing sector rotation from the high beta to the low beta sector. So consumer was one, IT is the other one, which is taking a lot of interest from the market. But if you look at purely in terms of the results and the outlook, IT has been reporting weak numbers, and the outlook, near-term outlook, has been kind of that weak, which doesn't give a confidence that the next 2 quarters we could see some improvement or growth. And hence, kind of neutral view, or you can say remain equal weight in the IT sector. We don't see a strong outperformance from the space in the near term. Having said that, some of the companies have shown very strong order book, and Wipro coming out with the second multi-million-dollar contract only goes on to show that while the near-term execution is slower, the spending or the long-term projects continues to be something that is attracting the IT companies in terms of growth. So if you look at the overall space within the large caps, what we like, TCS, because it has a diversified order book, diversified business So that gives an edge compared to others. So not that impacted in the current slowdown, and hence we believe that could do well. The other stock that we like is HCL Tech, given its again exposure to cloud, to the infrastructure management services. That again looks like pretty stable in the current environment, and hence that is something that we like. So we have a target price of 1,700 on HCL Tech, and TCS we have a target price of 4,600.
So Sid, before we let you go, give us a couple of ideas, a couple of investable ideas that you're looking at closely. Give and take everything. There's a debate between consumption versus capex. We got cement then, so we added another C to it. But anything you're looking at, which our viewers will gain from? Sid, I think you're on mute. If you could unmute yourself. Yeah. Please go.
Yeah, thank you. Sorry for that. So I think one space that clearly fits between the two is the auto sector, and within that, if you look at the two-wheeler space, Hero MotoCorp likely to benefit from the spending by the government on the rural side, the monsoon, which is likely to be doing well, and its strong presence in the rural sector. 1/3 of its business comes from there. It has a strong presence in the entry level, which gives it an edge compared to others. Plus, the company is launching newer models in the higher, that is 125cc plus segments. Within the scooters also, it is looking to launch new products. So overall, if you look at within the EV two-wheeler space, which is also catching up fast, the company is kind of expanding its own brand through the VIDA, and also increasing stake in Ather Energy, which is the third largest EV two-wheeler space. And finally, the third and another significant growth driver is exports. So not only is it targeting exports where it has a lesser presence compared to a Bajaj Auto, but it is also looking to set up plants in key markets of Latin America. It's setting up a plant in Brazil, apart from its existing facility in Colombia. So these factors lead us to believe that Hero Moto could do well. We are expecting 14% revenue CAGR and 17 to 18% PAT CAGR. And in terms of valuation, it trades roughly about 20 times on a 1 year forward, which is a significant discount to about 24, 25 times at what Bajaj Auto trades. So I think that is something that we are looking at within the broader market, if you look at to play the auto as well as the consumer and the monsoon theme.
Okay. All right, Siddharth, we'll leave it on that note for today. Thank you very much for joining in and giving us your views on a couple of those themes and those stocks.